The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, we got Mr. Draggy dragging along today, so he's moving the markets, shucking and jiving. Okay, let's get on to the markets. The first one we look at here each day is, by the way, those beautiful cartoons that we see are the work of Shane Smolian. He's going to be our guest today at 9:30. On Tuesday, we are going to have none other than Samuel Archibald Arrington Hits Crawford, the Crawford Perspectives. And on Wednesday, we are going to have Bill Meridian out of out of Vienna, Austria. So that's basically, we'll see what you like. Now, first one we're going to look at here is the DAX index. As you can see, there's ratios that we hit last night. We went up and we hit the 1.27 ratio. And then, of course, after that, you can see that we started to sell off. And this was the reason for our sell-off here in the markets that we have now. Those of you that are trading futures, this is the second Thursday of the month, so they start the rollover process. It takes usually a week or so. They go all the way out into the third week, I believe, the end of the third week, as I recall. But you should start rolling over and doing your trading in the December contracts for the Dow, the E-mini, the Russell, NASDAQ. All of those should be moving over to the December because that's where your action is going to be, where it's going to be working. Now, we did have something interesting last night. I wanted to bring this to your attention. This was brought to our attention by a couple of traders out of Hong Kong to show us that we were having a, hope you can see my charts. They are coming up, I believe. This is a really nice ABCD pattern. As you can see, this was a 61% retracement from the low on Monday, on the holiday. That was a beautiful ABCD pattern that formed there. It was perfect symmetry. In other words, AB was perfectly equal to CD. And then, of course, after that, you'll see that the market was able to, we'll put these in succession so you can see what happened during this time, because this is going to give you a pretty good idea of what's going to be happening with gold and silver here. Gold has got the same type of pattern, but it doesn't have the same weakness. Now, as you can see, with the silver here, we rallied 25 cents up into that $20 per ounce level. And then since that time, we've been able to come down and we've tested the 61% retracement again one more time. So going below 1988 now, 1988 per ounce in silver would tell us that we're heading down towards that level we were watching most probably around the 1960 level. So we're still having a little bit of correction here in gold and silver, but it still looks good. It's waiting to give us what we think is a good buying opportunity, but in fact, that has not has come as of yet. So we want to watch it. Now, as far as the stock market, we'll start out with the Dow E-mini because that's one that you folks like to trade, and it's very similar to the S&P. They have pretty much exactly the same pattern. You can see over the past several days, going back to the 21st of August, that all we've done is we've gone up and tested the 78% retracement level several different times. Now, the NASDAQ and the S&P were able to take that level out by just a little bit for a very short period of time and then rolled back over. And that was mainly due to what was happening at the DAX about 7 or 8 hours ago in the middle of the night when the DAX looked like it was breaking out. It stopped exactly at the 1.27. And then we started to roll over related to that. I believe that these are all related to things that are happening in the talking heads area of with Mario Draghi today, with the things that are going on with him. And it's no different than the Janet Yellen, only it's not as dramatic as the Janet Yellen because the United States is a bigger economy And we have bigger debt, so that's probably the reason why. Now we're having a very, very severe correction today in Treasury bonds. As you know, we've been relatively bearish bonds, so we had a pretty good rally in them yesterday. They got up to that 172 level, and now we've broken down, and we've already gone below the 61% retracement of yesterday's range, which is really not a very good sign if you want to be long the bonds. And remember, now we're in December bonds because they've also rolled over, and that's it. You'll notice that high we hit yesterday, that was a 61% retracement of the high hit at the beginning of the month. And you'll notice we had that 135 pattern very nicely on the bottom. That gave us a little bit of a rally, and now you're starting to come down. And when we go below that area of 68.24, that sets up a price objective in another 200 points, 2 handles lower, at around the 166 and change level. So, sort of keep that in mind as you're looking at it. We had a couple of questions about the cattle yesterday. Mr. Z, I think, held your hand pretty well yesterday. He was buying it right after the opening. It rallied 3 cents from that level. That should be a very good reversal day in cattle, folks, because we did get down to that level that we were, keeping an eye on, and we think that we've got a bottom in cattle. I don't trade cattle very often, but I know some of the folks here at TFNN do. So just keep in mind that use a stop, because this has been a very strong market to the downside. It was down 22 days with only 2 one-day corrections. So that's extreme weakness, but that's what forms bottoms. So keep an eye on that. That's the one that really is very, very interesting to watch. Now, as for today, if you'll recall, we were looking to see if the euro could get out of its way here to get a little rally. We were waiting for a rally in the euro to get up to this 113.20 area, and that's what we've hit so far this morning. That was the 78% retracement of this last move that we had. And so I'll put this up and you'll be able to see it here in 1 second. Whether this is going to be the top or not, we'll have to wait and see. It's just a question of whether, this Mario Draghi says anything really crazy or not. In fact, anybody can do anything. As a matter of fact, the premier, whether or not he's the premier, the financial guy out of Japan today said there was no limit to the amount of negative interest rates they would go to. That's exactly what he said. In other words, you can charge, we're going to charge you interest for holding your money. So anybody that does, the only people that do that, folks, believe me, it has to be a government, because nobody in their right mind would give people money and they charge you for it. Hello? I mean, what's the matter with people? Am I being naive here? Give me some feedback. Am I being naive? Why do you loan money for people and they charge you? I like this idea. We'll see what's happening. Okay, we asked a question about Rich Anderson. Rich is out of contact for the next door. Yeah, shut the front door and raise the rent. That's exactly right. I don't know. Does anybody want to guess where that quote comes from? There's a big prize for anybody that guesses it. I'll give you one little hint. It was Elvis Presley's favorite movie. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we need to take a look. Correction first. The Treasury bonds, the December Treasury bonds went down to the 78% retracement, folks. I thought they were a little bit below the 61, but they did go down to the 78% retracement level at that 169.15 level. So that's something that I think is relatively important to look at. Now, the next chart that we're looking at, of course, is the chart for the crude oil. And, you know, as you can see here, you know, we had a market that was moving more or less in a type of an uptrend where we had higher bottoms. And this was, of course, you know, the 30-minute chart. But what's happened since that time, you'll see here that as we go into the next chart, you'll see that we have a ABCD that is completed up in here, but we have another larger ABCD that completes up around the 78% level. And of course, we have oil inventories today, and that always is a big mover. So we expect this crude oil to get up to this 47.60 level at some time today. And on the daily chart, you know, that would be a 78% retracement and also a perfect ABCD should it get to that level. So keep an eye on that as you go through. We've had a request to take a look at Facebook, and we're going to do it two ways because that happens to be a favorite stock of mine because I am not a Facebook person, but I like to see how the public reacts to it. This is going to be a long-term daily chart that we see on Facebook here. And as you can see here, it follows the ratios and patterns very, very nicely. As you'll notice, we had a 3 drive to a top pattern in November. The stock dropped, you know, down to the 50% level, and then it's completed an ABCD up here at this 130 level in Facebook. But what I wanted to show you is that, you know, we look at these stocks that are brought out for not opening price. What do they call those things? What do they call it when they bring a stock out for the first time? Got a CRS moment, folks. Can't remember what they call it. Open IPO, initial public offering. God love you. I knew it had something to do with PO in there, but I couldn't figure it out. But this one I happened to be involved in. This was with Facebook. We had some folks that really wanted to buy this over in Saudi Arabia. And the stock came out, as you see here, it came out at about 45. And it closed right near the low end of the range, and then it went all the way down, dropped more than in half. And I tried to convince them to wait for a Gartley pattern to buy it. They really wanted to really buy it. Fortunately, one of the few times they listened to me, and they were able to get in the stock at around 24.5. And as you can see, about 2 weeks later, the market gapped up to 34 and then has since made a high now at 131 yesterday. But the principle here is to remember that when we have these IPOs, give them a little time to trade, because the patterns will show up very, very nicely, because these are, very, very actively traded things, and you'll be able to see, how the darn things move up and down. And that's the real key, to watching these things as near as I can. So that's the main thing that we want to remember. So these IPOs, we don't get many anymore because there don't seem to be any. Everybody doesn't need an IPO because all they do is borrow against their stock, and because interest rates are nothing and they buy their stock back. But there'll be more, as we know. But anyway, these are the ones that you keep an eye on. Wait till they form a pattern, so that for two reasons. One, that helps you control your risk, and it also gives you an idea of what your profit objective would be. That's a key thing, I think, that is something that you really need to, keep an eye on. That's just my opinion, of course, but I think it's something that we ought to keep in mind as we go through here. Now, as far as some of the other currencies, the Japanese yen has held that 61% retracement level to the downside. We'll wait and see what's happening. We're having some pretty good action in the stock indices early this morning here. We've got a situation where we backed off about 13 or 14 points off the high, which was a surprise to a lot of people. But there was a lot of resistance up there, as we showed you in the Dow Jones, and the same thing was true of the Nasdaq, and even more so with the New York Stock Exchange Index, because it has not even come close to making new highs all during this run that we've had since, I think it extends all the way back to around July 30th or something. It's been several months that we've been in this really, really tight trading range, that we're keeping an eye on for sure. But that's the bottom line. The two that I think that are most important today from a trading standpoint, of course, is one is the Treasury bond, the Christmas T-bonds, the December bonds. If they get below that 168.20 level, that's a full point from where we are now, and we're already down 2 points from the high this morning. This would be a really big outlier event. The other one is watching this euro, where it's trading right now around this 113.20 level. That's a pretty significant area also that should be very, very strong resistance in the euro. But remember, the slightest words out of Mr. Draghi's mouth could make this thing really go. So you don't want to risk a whole lot above that 113.20 level. I would think 30 pips would be about the most you would have to risk if you were looking at that particular situation. As far as the gold and silver, I still think we're looking more at lower prices. We've already, since we were on the air, silver already took out that chart that I posted where there was some support at 618 at 1990, and we went through that and we got down to 1983 or 84, and that sets up another price objective in silver down around the 1965. And I believe as we work lower, and this is, we started out the week at gangbusters, and if we don't close really strong, that's going to tell us that we will get another correction here to take a look at the long side in gold, because we did have 3 lower highs during this last rally, And the other thing that was important is the platinum only rallied to the 38% level. You know, we got a 61% retracement in silver. We got a 78% retracement in the gold, but platinum could only rally to the 382. And of course, the miners didn't do very much either. And that was in the face of a really rising stock market. So all of these things are just make the water just a little less tepid, you know, for being bullish, because, you know, these markets have a tendency to have false breakouts, especially when you have very little volume, you know, like we're seeing in stocks especially, and also in some of the commodities too, because there's just been an absolute lack of interest in some of these things. Now we'll have Shane Smolian on in just a moment, but I did want to bring up one of our listeners asked to take a look at copper, and as you can see here, you know, copper's been in a pretty sustained downtrend for the past year. We've had lower tops all the way through here, but we've had two higher bottoms, both of them at the exact 786. So going to take a break here. We'll have Shane Smolian of wolftrader.net at the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Shane, come back, Shane.
Good morning.
Hey,
Can you hear me?
Hey, Chief. Hey, perfectly. I've got your first chart up. They love those cartoons. I use them every time you send me one. I don't know how you think of that stuff, but it looks pretty good. Anyway, go ahead. You're in charge.
All you need is Microsoft Word and Microsoft.
Yeah, right.
Paint, so.
Yeah. I only have 11 Blackberries. I only have 13. So
Okay.
when I get to my 13th Blackberry, maybe I'll be able to do that kind of stuff. But fire away, my friend.
All right. So we talked before that we had to see where the market was going to be around this time of the month. And a lot of that depends on what the Fed is doing. And we had a lot of negative aspects and some very negative transits and aspects through August. And the market didn't go down, and it didn't want to go down. So what I have right here is the big picture. And these are actual signals that we've developed using the Fed juice. I actually use the Fed juice as a pairs trade with different markets. And you can see that we have a 1 week chart of the SPY, and then we have 1 day signals, all the way from the S&P 500 down to oil and gold. And the S&P 500 has been systematically building into this bullish profile, like a very bullish profile. And we have all systems here are in a buy signal, and the bullish conditions have been building now. And the thing that I'm looking at is that we're coming to an end of the negative portion of this astrology cycle. And the Fed has been, the last week has been pushing more money than I've ever seen with the Fed juice into the market. So the Fed is fueling this for a sharp rise in the coming weeks.
Wow. Okay. That makes sense. I mean, you've led us to the promised land so far. So we'll take a look at the next one, and that is relating to the relationship of the Federal Reserve and also quantitative easing.
Yes,
Chart
this
two?
is the measure of the Fed juice that I track. And this month I actually did something a little different. I looked at the moving average of the 100-period moving average, which is a level of the persistence. And instead of having just spikes up and down, this is more of a smooth curve. And you can see all the way over to the left when you have QE1 and going across QE2 and then Operation Twist and then QE3 that the Fed was increasing each time with each round of quantitative easing. And the market was responding to these rounds. But right around August of 2015, over on the right-hand side, when they had that decline after the taper, they started pushing the juice higher than they ever have before. And so we can see now that we're at record highs, all-time historical levels for the Fed juice, and that's beyond any quantitative easing, quantitative QE1, QE2, QE3. And this definitely favors Hillary Clinton, because we're going to show later in some of these charts that the market follows, or the election follows exactly what the market does. So if the market's rising, the incumbent party is going to be favored, and in this case, that's Hillary Clinton.
Okay. So you think she has a possibility of a big advantage here into the election?
Well, when we get to the next few charts, we'll see. But definitely a rising market favors her. But I will also say that she has a very difficult chart. Her natal chart, her astrological chart is very difficult right now. So it's kind of an interesting battle between two things. I mean, you've got the Fed here trying to keep this market up, and that definitely favors her. But then she's got this personal chart. Her natal chart is very difficult. So it's kind of interesting to see those two things balanced against each other. But overall, we can say that a rising market does favor Hillary Clinton.
I noticed yesterday that Mark Cuban, the owner of the Dallas Mavericks, who used to own broadcast.com, came on and said that he was going to put on a huge short position right before the election if he thought Trump was going to be elected, because he thought the market would crash if Trump got elected. And yet, I've heard that so many times over those election cycles that none of them have ever worked that way.
Yeah,
but we'll see.
I would never presume anything like that. I think that's a foolish bet to do. I would think on any candidate, because we have this Fed behind the scenes. I mean, you can't just come out and make a statement like that. We really don't know what's going to happen, and I think the tone of this election is definitely unpredictable. So I would never place a bet like that against either candidate. Okay. But what we can do is we can look at what the Fed is doing. So this chart that you have up this is a new cycle that I've I looked at, I actually put this in the astrological software, and it's a solar cycle. And a solar cycle is an annual cycle. And so the Fed runs the market up every quarter. And this is a very predictable pattern. And so what's happening is we're entering this period right now where the Fed is about to run the market up into their annual quarterly run-up. So this is why I said if the market hasn't fallen by this point of September, that it's probably going to rally. So I think we have a very good chance to rally through all the way through to early October now. I think there's a very high chance that we're going to just keep going higher. Mm-hmm. And if you can see here also that after the beginning of October, it starts to fall. So I think in October, there's a chance that we could have a market pullback for sure. But for now into the beginning of October, I think everything points to a bullish situation.
Okay, now do you think? Well, of course, we've made new highs already, so that's not a question. Do you have any upside projections on the Dow where we might go? Well,
I'm looking at the S&P, and we also have to take this in the context of, we're in a declining planetary speed index, so we're more of a negative tone. So I think we have the potential, to push up to on the S&P to 2212 or 2235. I think it could get there by the beginning of October. I think it's probably likely it's going to go there. It could go higher, but I think we're going to be. I think there's a very good chance with all of this Fed stuff and the historical pattern here of the Fed, and that they're going to start their quarterly ramp up right now. That it's basically looks like this is a tractor beam to go higher into October 1st. So I would think 2235 could be hit pretty easily by the beginning of October.
No, that would be a pretty good run. That would be quite a bit. Now the next one that we have are these polling numbers you have with the S&P.
Yes,
yes. That's the next chart. Okay.
Yeah. So we've talked about that the market or the polls follow the market. But this is an actual chart showing you the comparison of the two. So the top shows Hillary Clinton's numbers, and I've labeled them A, B, C, D, E, F, and G. And if you can see, starting on the left-hand side with A, capital A, that was the bottom of the market back in October. And then Clinton's polls on the top, they more or less tracked the market all the way up into January or December, right before we had that big decline. And then her polling numbers also fell with the market. And then they rallied all the way back up when we had that big Fed juice rally from February all the way back up into that April area. Then it pulled back into label E. Now what's interesting is on label F, that's right around when the Brexit happened. And you can see that her polling numbers they showed weakness after that. In other words, she sustained some damage from that because that's more of a populist tone. So we'll talk about that.
We have to take a break here. Yeah, we'll be right back, folks. Pay a few bills.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, with Shane Smolian of wolftrader.net, and we were talking about the relationship of the S&P and the polling numbers for Secretary Clinton. Do you want to go ahead and, or I guess she's candidate Clinton now. So why don't you go ahead and finish that up, and then we'll get to the second part here.
Sure. So the basic thing to take away from this is that the polling numbers follow the market. And there's a lag of, I think, about a week. McClellan came on the other day on CNBC and was talking about that. But this is the actual chart that you can see. I think the one thing to take away from this is that she is more sensitive to negative moves in the market. If you look from D to E on that chart, that you can see that her polling numbers tanked very strongly with that. And then after the Brexit, she had a lot of issues. So I think on balance, the market has rallied a lot from F to G on that chart, but her polling numbers have rebounded not as strongly. So I think any decline of the market is going to harm her chances. I think on balance, she's, the market will help her, but she's weak. If you look at these polls, it's weak, and she needs a lot of help here from the market.
Well, you can see some of these polls, and, I don't believe all of them because, people make statistics fit what they like to see, but they jump around quite a bit from being up 12 to, being down 2 or something like that. That doesn't make any sense to me either. And then they talk about these states. That's not the important thing. We have a question for one of our listeners, and that if we start a sharp sell-off this week, would that change your scenario for a higher market still into October?
I mean, anything is possible, of course, but I think with the Fed coming in, it's going to be hard for the market to go down. I mean, I will evaluate that if it happens, but we've seen this market now, and last Friday was interesting because, everything was in a sell, everything was going down, and the market, it reversed on the dime, and it went right back to the middle of the channel, and I think that kind of changed everything. So, if we get to that point.
Exactly at your 10:30 time frame too is when it started. We had several of our listeners remind us that you had told us about that, so it's very interesting.
Yeah, so I mean, I don't see it right now. I don't see it. I mean, if it does, I'm not going to say it can't. Of course, it can happen. Of course, the market can sell off. But based on what the Fed has done in the past, what they're doing, the amount of money they're putting into this thing, I don't see it going down. It's going to be and also. In September, the end of September, we have some very positive transits. I mean, there's a lot of very positive transits going in through about September 26th. So I don't know. Yeah.
Will those transits affect the debate, because that's a debate September 26th?
Yeah, that should be a high point for Clinton. I mean, if the transits are positive and the market's going up, that should be like a peak point for her. After that, we'll have to see what happens. But as I'm looking at it right now, and we know what the Fed's going to do, they're going to start pushing the money even. And remember, they're at record numbers right now. I mean, the last week has been so high every single day. And now we're coming into this run into October 1st where we know, based on their annual cycle, they're going to push even more money in. So it's going to be difficult for this to go down. You're going to need an external event, some kind of a shock for the market to go down.
I keep going to the front door looking for some of that Fed money, but there's none there. I guess they must be putting it in the Postal Service. Listen, we got a chart here. We got 2 more minutes, 3 more minutes, well, 4 more minutes till the break. What I'd like to do is to do this next chart, which I guess is the transit chart for Hillary. And then also what I'd like to do in the last section, I want you to tell the folks, you know, the things that you offer, because you have some great stuff. One other thing, Shane, on Tuesday, you're going to have our old buddy Alfie Lavoie is going to be on as our guest, and he's got a new simple program.
The master. Alfie the master.
Yeah, he's good. But he's got a new simple program for people that trade mutual funds and stuff. Very, very slow moving, but it's supposed to be very interesting to bring it to us. But anyway, let's go through this Hillary Clinton chart. She was born on October 26th. 1947.
Yes, and so for all your listeners out there, all of this charting that I'm doing in terms of the astrology, this is all based off of Alfie Lavoie's software. This is Air software, and so you can find his software, Air software, or alfie.com. You can find it there. Excellent software. I mean, top line here. Okay, so I'm a Uranian astrologer, and we Uranian astrologers. Uranian astrology was developed in World War I. And it took astrology to another level. We look at midpoints, and every now and then you get in a chart what's called a double point in a chart, where you get it doubles the energy in the chart. So what Hillary Clinton has going into the election is a double Saturn-Neptune point coming into the election. So you can see on the chart that the Saturn of the transiting Saturn equals her Saturn-Neptune midpoint. And then the transiting Saturn-Neptune equals her Neptune. And that is a very difficult aspect. And I would think, you know, this is what we're seeing now with all of these email scandals. It's like no matter what she does, something new keeps coming out. It's a health issue. And so we see a lot of issues. People are talking about her health. And, you know, this chart would suggest there is an issue with the health, or there could be. And this is definitely not the chart you would want if you trying to win a contest. So this is a difficult chart. So I think it's interesting that she has this difficult chart. She's kind of limping to the finish line, but the Fed is helping her, you know, with the markets. So we've got these two things going, and it's just like, you know, if I just looked at her chart, I would say, you know, Trump has the advantage, but we got to look at the reality of the markets and the Fed, and the reality is that the Fed is going to push this market higher. So that's, you know.
Yeah. I was in California in 1980 when when Reagan was elected, and the newspapers in the LA area were saying that, you know, he had such a positive chart. The astrology, that was the astrology section. I wasn't into astrology at that time, and I was sort of laughing about it because they were bringing it up quite a bit. And sure enough, you know, he won in a landslide. So some of this stuff certainly does work, as we know. And I really, you know, this stuff has been around for so long that it's really quite amazing that it's not a scientific subject in some of the, you know, the medical schools and things. But, you know, MIT with Dr. Andrew Lowe, they're using a great deal of astrology now. So it's coming more and more popular, I think.
Well, you know how the Germans are. I mean, you know how they are with the precision. So, you know, the Germans took this to another level with this Uranian astrology, and it's very precise. I mean, these points, when they hit these midpoints, there's a level of German precision here that is unprecedented. This takes traditional astrology to another level. And, you know, when I look at Hillary's chart, it's a difficult chart. I mean, this is, you know, a lot of times people do fall ill when they have a situation like this, or there's just loss. And also, let me throw in one more thing here. Julian Assange has a Saturn-Neptune aspect with the United States, and that's coming up into October. And so with her chart too, you got to wonder if these WikiLeaks are going to affect her also, because it's like the three of the charts are tied together with this Saturn-Neptune energy. So I think we should watch those. I think that's going to be significant. The information he's going to leak out, I think it's going to be significant to the election. I think it's going to affect the election in some way.
He's the man that owns WikiLeaks.
Yeah, it's interesting. He has an interesting chart. His chart is with the United States. It's almost the same birthday, so he's got kind of a karmic thing with the United States.
Okay, we'll take a break here and we'll be right back with Shane Smolian, WolfTrader.net.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Shane Smolian of WolfTrader.net. Why don't you give us an idea of how the folks could reach you and some of the products that you have, because you've got some really good information that is very reasonable in price. So why don't you give us a little commercial here these last few minutes? How's that?
Sure. You can find the website at www.wolftrader.net, and on that you can sign up for there's a free email list. I'll give some updates, or if I'm on the show, I'll update it. I'll send you information. And then also you can email me at shane@wolftrader.net. And there's 2 subscriptions. There's a newsletter, which is $36 a month. It's very reasonably priced. I give a lot of information there. You get an S&P overview with the markets, with the astrological view. You get a report on the Federal Reserve and how they're pushing the money in and out of the market. And then you also get solar and lunar cycles for the month. And I send out some occasional email updates. The second one is the full service, which is Twitter, and I highly recommend that. If you're an active trader and you trade the ES, we post all trades there live, so you get a continuous feed throughout the day. So it's just every day I'm there tweeting. I may tweet up to 100 times a day. It's a lot of information flowing at you.
Shut the front door, 100 times a day?
Absolutely, all day we're tweeting information. I'm just constantly feeding information.
Wow.
So if you're an active trader and you want to know what's going on an hourly basis with the Fed and trades, we post everything there. Every trade has limits, stops. Everything's documented there. It's a lot of good information going on. It's a good value. I provide a consistent stream of information to the subscribers. So, both of them are good. It just depends on what you want. If you just want an overview once a month with some occasional email updates, go with the newsletter. It's a good value, $36. And then the full service is for the active trader that wants to have just the constant information throughout the day.
Do you just cover mainly the S&P? Is that what you're working with?
Yeah, I cover mainly the S&P for the trades. That's what we trade. Everything is, we have this through our walk forward analysis technology. Everything is updated daily. And we also have gold and oil now on some Fed.
Oh, good.
Yeah.
All right, thanks for coming on, my friend. We appreciate it, buddy.
Thanks, Larry.
You bet. Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.